The Federal Reserve Bank is in a weird position and it's getting them a little bit nervous about our economy because on one hand, they want to stop printing so much money and they want to raise interest rates to help keep inflation in check, but at the same time, they're not doing that because they're worried about the health of our economy. They're worried about our unemployment rate because we still have so many people that are not working, and they're worried about people going back to work because employers are still struggling to find employees even though we have so many people out of a job. What's up everybody, I am Jaspreet Singh from theminoritymindset.com, where money minds rethink rich. The Federal Reserve Bank's vice chair, so the second person in command, recently gave an interview where he talked about how he wants to start raising interest rates in the United States, and they want to start doing that in 2023, but they're not going to do that unless the unemployment rate in the United States comes down to around 3.8% at the end of 22, and the reason why he's so worried about that happening is because he says that he's worried about the state of our economy. For one, he's worried about the unemployment rate that we're seeing right now because employers are not adding jobs fast enough. And now it looks like he's also worried about the Delta variant of this virus because he says that can hurt our employment market even more than we're hurting right now. Essentially what he's saying right now is our economy is not back to normal yet. We still have so many people out of a job, and the Federal Reserve Bank is still printing more than $100 billion every single month to help prop up the markets, but they don't want to do anything because they're worried that this is going to slow down the economic growth, because right now what we're seeing happen is companies are not adding jobs fast enough. What we just found out is that in July of 2021, private employers, private companies in the United States only brought on about half the number of new employees that they expected to bring on, and this was the slowest employment growth that we saw since the beginning of 2021. Couple that with the fact that somewhere between 7 and 10 million Americans could start losing their unemployment benefits this September, and this has the Federal Reserve Bank kind of worried about what's coming next in the economy. So let's talk about what's going on, but before we do that, I need you to do me a quick favor and smash that thumbs up button below. And if you haven't already, be sure to join our brand new free Discord server called the Guac Talk Community, where we talk about all things minority mindset. You can chat about the stock market, the real estate market, the cryptocurrency market, and all things building wealth. This community is completely free for you to chat and network with other minority mindset thinkers. So if you want to join our free Discord server, I'll put the link to how you can join the Guac Talk community in the description below. So the Federal Reserve Bank is the entity that's in charge of managing the monetary supply in the United States. But the thing that's interesting about the Federal Reserve Bank is, although they're called the Federal Reserve Bank, they're not actually a bank because you and I can't go there to deposit money. They're not a reserve because they don't keep cash reserves, and they're not federal. They even say so on their website. They are not a federal entity. What the Fed does is they can control the money printing in the United States. So when the United States government wants to borrow money so they can do more stimulus packages, or they want to create this infrastructure package that they don't have the cash to afford, they borrow this money from the Federal Reserve Bank. That the Federal Reserve Bank works with the Treasury Department to print, and the Federal Reserve Bank also controls interest rates in our economy. The reason why this is important is because both of these things, interest rates and money printing, both affect inflation, because inflation is when the value of our currency, our dollars, get diluted. So as more and more money is printed, as more money enters our economy, then the value of each individual dollar that you and I have becomes less and less valuable, which makes it more expensive for us to go out and buy things, because now you need more dollars to go out and shop, because the price of things have gone up because the value of our dollars have gone down. In 2021, we have been seeing a record amount of inflation. Now, unless you've been living under a rock somewhere, this should not be news for you, because if you go to the grocery store, if you try to go on vacation, or if you try to go and buy anything, chances are it's going to cost you way more now than it did just a couple of years ago. Now, there's a few reasons why we've been seeing the price of things go up so fast. One of them is we still have supply chain issues in our economy, so companies are having a tougher time sourcing products, so they can't create the products that they want. Companies are facing a labor shortage. They're having a tough time finding employees. And then we have all this money printing that we're seeing going on, which we saw happen in 2020 and 2021, which has diluted the value of our dollars, which makes it more expensive for us to go out and buy things because the value of our dollars has dropped. This is where the Federal Reserve Bank comes in, and they say that they want to start doing things to help curb inflation, to help the American people. That way you don't have to worry about going to the grocery store and paying 3 times more for your groceries than you did just a year ago. The way that that they can start putting inflation in check is by one, stopping printing so much money, and second, by raising interest rates. Right now, the Federal Reserve Bank is still printing about $120 billion a month. That way they can take this cash and inject it into our markets by buying bonds and treasury bonds and mortgage-backed securities to help inflate our market. That way investors don't feel so scared investing their money in the market because they know that the Federal Reserve Bank has their back. And so the Federal Reserve Bank has been propping up the markets through all of this money printing. And with interest rates, as interest rates are lower, people are more likely to go out and borrow money, because when interest rates are lower, it's cheaper for you to go out and borrow money and get a mortgage. So when interest rates come down, people are more likely to borrow money, and corporations are more likely to borrow money, which means banks are lending out more money, and banks get this money to lend out through the help of the Federal Reserve Bank. When you go and you deposit your money in the bank turns around and they tell the Federal Reserve Bank, hey, we got some new deposits, give us some more cash so we have more money to lend out. So then as interest rates fall lower, you have a lot of people and a lot of corporations going to banks borrowing money, which means you have a lot of banks going to the Federal Reserve Bank asking them for more cash, so banks have more money to lend out. Both of these two things, this money printing and these low interest rates, help increase inflation because they allow more dollars to come into our economic system. Now, in general, this might not seem like a bad thing because you have more money going into the system, but it becomes a bad thing when it causes the price of things to grow so much faster than wages. Because if you have expenses growing like this and wages are only growing like this, well, now it is becoming harder and harder for people to be able to survive because your rent keeps getting more expensive, your groceries keep getting more expensive, your vacations keep getting more expensive, and the money you're making from your job isn't keeping up with your expenses. This is why the Federal Reserve Bank keeps saying that they want to start raising interest rates and they want to stop the money printer, but they're not doing that because at the flip side, they're also worried about the health of our economy right now because these low interest rates and this money printing is keeping the economy going. And they're worried that if they stop these two things, they're going to slow down the economy, which is going to hurt the economy even more. Right now, we have millions of people that are not working, but at the same time, we have so many companies that are looking to hire people. And so we have companies that want to hire people and companies are struggling to find work, but at the same time, we still have a record number of people that are not working. Now, we know where all this stemmed from. This all started back during the 2020 pandemic. When the pandemic first hit, we saw the entire economy shut down. We saw so many businesses go under, and we saw many people lose their jobs, at least temporarily. But then as the pandemic started to fade away, people started to come back, but then some people didn't want to go back to work. Some people are scared of getting sick. Some people had to take care of their parents or their kids, so they couldn't go back. And some people were just making more money on unemployment and said, why should I go back to work where I have to work 40 or 50 hours a week and where I make less money than I would on unemployment? Up until the middle part of 2021, everyone assumed that things were getting better. The United States was opening back up, countries were opening back up, people were going out and spending money again, people were going out and doing things again, and people were feeling safer. But now as we go into the second part of 2021, we're starting to see a resurgence of this virus, and now because of this Delta variant, people are starting to get worried again. Some people are saying that they don't want to go out and travel and spend money. And now the Federal Reserve Bank also says that they're worried about how this new variant is going to affect the employment market because they're scared that people are going to start leaving their jobs or that employers are going to start letting people go because they're not making enough money because of this variant. Like if you run a restaurant and people are scared to go out and eat, or because there's new restrictions which are preventing people to go out and eat. Now again, restaurants are going to be struggling and they may have to lay people off, which could cause more employment issues. Most people expected that in 2021, we would see job growth kind of like this. As we progress to 2021, more and more people will be going back to work. But what we're actually seeing happen right now is, yeah, we saw this boost in people going back to work. Now we're starting to see that growth kind of slow down. If we go back to the CNBC article, which talks about how private companies only added about 330,000 jobs in July, even though we were expecting to add more than 600,000 jobs in July, what people are seeing is that people are not going back to work as fast as we would like. What you want to see happen is the economy beat expectations. You want economists to expect that we're going to add 600,000 jobs, but then in actuality, we add 1 million jobs, which shows that our economy is growing faster than expected. People are going back to work and the economy is recovering quicker than what we anticipated. But what we're seeing happen right now is that the economy, or at least people going back to work, is growing slower than anticipated. And that's one of the reasons why the Federal Reserve Bank says they're worried. And that's why they say that they don't want to put the brakes on this money printing or these lower interest rates because they're scared that they're going to hurt our employment market even more. Now, for all of you money nerds out there, this is where things get a little bit more interesting because CNBC put out another article where they talked about how somewhere between 7 and 10 million Americans are on the verge of losing their unemployment unemployment benefits because it looks like in the beginning of September, the federal government is going to stop sending out an extra $300 a week. Starting back in March 2020, when this pandemic first hit, the Federal Reserve government wanted to help people who were on unemployment kind of keep their same income that they had as they were when they were back at their job. So what they did was they imposed a system where the federal government would send you some additional cash to your state unemployment benefits. That way you weren't really struggling financially because the federal government was now taking care of you in addition to the state government. And this went on from March 2020 up until now. And now what it looks like is that coming September 6th, the federal government says that they're going to stop sending out these additional $300 a week checks to people who are on unemployment. And so right now, this is affecting somewhere between 7 and 10 million people. And it looks like that coming September 6th, you have some states around the United States that are also going to stop their state unemployment system. So around 7.5 million Americans are going to stop receiving these extra unemployment benefits completely starting September 6th, 2021. This is where things are going to get very interesting, and it's kind of hard to predict exactly what's going to happen, but there's a few different possibilities. Possibility one is people who are not going back to work are going to continue on unemployment because of all the reasons that I addressed earlier, and now people are going to be having less money because the federal government is not going to be sending out those additional $300 weekly checks. And now, because of the higher price of everything around us, a lot of people are not going to be able to afford the same lifestyle that they had just a month ago because they're making $300 a week less. This could potentially hurt companies because now they're not going to be selling as much stuff because people are not going to have the money to afford the stuff. This could potentially force companies to lower their prices because if they saw that, hey, everyone has money to buy our stuff, so let's raise our prices, and now people don't have money to afford the stuff, maybe this is going to force companies to eat up some of their profits and lower their prices. Or on the flip side, these lower unemployment benefits could push more people to go back to work. This again makes me wonder what's going to happen if all of a sudden, come in the middle of September, you see all these people now trying to look for more jobs, and you see all these people fighting for jobs come September. Up until now, you've been kind of seeing the opposite. You've been seeing companies fight against each other to get employees. You've been seeing companies raise their wages. You've been seeing companies up their bonuses. You've been seeing companies make their job more attractive. That way they can find employees. But if all of a sudden you see this surge in people wanting jobs, what are companies going to do? Are they going to keep the higher wages? Are they going to keep the bonuses? Or are they going to go back to normal? Or are they going to lower their wages? I don't know. I mean, this is where it's really interesting to see what's going to happen, because if all of a sudden in the middle of September, you see millions of people say, hey, I'm not making enough money to afford my lifestyle, I need to go back to work, and now companies are flooded with applications, it could really change the dynamic of the way that our economy is. Putting all of these things together, from the virus and potential restrictions to this unemployment issue, to companies struggling getting jobs, to the higher prices and inflation, this is why the Federal Reserve Bank is getting worried about the economy, and they're getting worried about what they should do, because as they continue all this money printing, that can continue the price rise of everything around us, causing all this higher inflation, while we don't actually solve the root cause of our problem. So there's a lot of issues that you want to pay attention to, and we'll be covering these things on our YouTube channel, which is why if you haven't subscribed to our channel yet, make sure you do that. But this is why financial education is so important, because this education can help you make smart decisions with your money. That way you can come out of this whole mess a financial winner, instead of being one of the people that is just a pawn in the system. If you enjoyed this video, here's the video on old money rules that you need to stop. And while you're at it, download our free guide on how to start generating passive income. And as always, keep hustling. The first thing you have to do is have your net income deposited directly into your checking account. I call it your net income because, well, every dollar you earn is not every dollar you keep.